Today is Thursday, August 7th, 2025, and my account is doing pretty good today, up 3.5%. Roth IRA is up 8.3. Okay, it says 8.33, but then, okay, I see why it says 8.33 now. But anyways, I was up 7.33% and then up 0.93% on the overnight market. And this whole move in AMD is a little bit sus, I'm not gonna lie. So yesterday, I believe they reported earnings, stock tanks, but then today there's a news headline that says AMD could potentially be exempt from Trump's 100% tariff on semiconductors, and the stock just completely bounces right back up. And the reason why I say it's a little bit sus is because any of you guys that have been paying attention to my previous videos and just this earnings season in general, it really does feel like the market has been screwing both sides. Now, I'm still waiting for Honest to bounce back from this big crash, but we'll get to Honest in just a second. If you guys remember the Robinhood earnings, it was kind of a snooze fest. It went down a little bit, but then it went right back up, and it's right at 100 at 11 now, I want to say. Lemonade is another great example. I mean, the stock, it was up past 50, I want to say $52 a share. Yeah. So it was at $52 a share. And then today it just completely craters. And I believe SoFi's earnings was also kind of aligned with that volatile movement on both sides. I mean, there was that one day when SoFi crashed pretty bad after earnings. So, I mean, the stock popped like $24 a share past 24, and then it crashed, and then it rebounded again, and then it crashed again. So it's aligning with that trend that we've been seeing where stocks, they report good numbers, or maybe they do have a good earnings reaction, and then it just gives up its gains, or going into earnings, it has a nice upward trend, and then it just completely craters, or the stock, maybe it gets a nice pop and then it comes right back down. Google was another example of this. I mean, it was down a little bit, but then up, kind of break even after earnings, and then it went up slowly these past few days. And some other stocks that reported earnings today, Pinterest. I mean, this stock goes down basically on every earnings call. It's not even a surprise, but when it did go up, but then down, so it's kind of swinging both sides after the earnings reaction. So kind of aligned with that theme of the market just wants to screw both sides. The stock doesn't want to move. It wants to burn premiums, right? Anybody that's gambling on earnings. Anybody that has been buying up stock going into earnings thinking that there's going to be a big move, or buying options going into earnings thinking that there's going to be a big move, has been screwed on either side, except for a few stocks. Obviously, you know, anybody that has shorted Pinterest, I mean, they probably made a decent amount of money. Anybody that was long Shopify probably made a lot of money. So there are a handful of stocks here and there that have done pretty good, but overall this earnings season has pretty much screwed both bears and bulls. And just giving a quick update to my transactions, I did go ahead and sell another covered call on Robinhood for about $120, and then of course I collected my RAPX dividends, so a little bit of cash inflow into my account today. But the big topic of today that I wanted to cover, it looks like Honest is recovering a bit here in the after hours. I didn't see that. I mean, all I was really paying attention to was this huge 19% crash earlier today when the market was open. And then I kind of just closed out Robinhood because I was a little bit depressed. Just kidding. I don't have any emotions. Now, when it comes to the earnings summary and just what I think about their financial health, I am way too lazy to get into all these numbers, so I'm just going to go ahead and ask an AI after this. But I just wanted to quickly give my reaction to this earnings move before we went ahead and dive into the financials. And financially, I do think Honest is still an okay company. I only glanced over it, but this earnings move, is it an opportunity? So it was slightly disappointing to see this crash in Honest, only because I've been saying that my price target in Honest is $10 a share, and it is still $10 a share. But the reason why I say this downward move is depressing is because it increases the risk of this company being taken over, unfortunately. Now, I don't want this company to be taken over. I know a lot of shareholders in Honest keep talking about a potential buyout from like Procter & Gamble or whatever, like these older companies. But honestly, I just want to be a long-term shareholder in Honest. I might be a little bit biased because I actually do use a lot of their products, especially their baby wipes, of course. And no, I do not have any kids. So you guys can judge me in the comment section. But I really want to be a long-term shareholder of the company, be there from back when the stock was $2 a share, $3, $4, and eventually I do think it'll be $10 a share, and then so on, back up to $20 a share potentially. And as they roll out some new products, continue to innovate, improve their current products. And I believe they used to also sell cleaning products on top of what they already sell right now, which is mostly baby products and beauty products. They used to also sell cleaning products. Not sure what happened there. It might have been during that bear market period when a lot of companies like Robinhood, they were kind of rolling back on features to focus more on their core business and growing out of that bear market just to be a more stable company. I think that's what was going on with Honest. They were kind of discontinuing certain products to focus more on the products that actually worked, that actually sold in retail stores to make their numbers look good in the short term, get out of that bear market. But like I said, I really want to be there in the future, and I want to hold this stock basically forever. So if I want to be a long-term shareholder, you might be wondering, why am I disappointed on this 17% crash? Shouldn't I be excited? And yes, I am. But like I said, it increases that risk of a potential buyout. And yeah, it is easy money. If tomorrow literally somebody announced that they're going to buy out Honest, that stock is going to be up like 50% in one day. But I really don't want that. An easy 50% gain in one day, sure, it might be exciting, but that means it's only going to be $6 a share, right? Or maybe $7 a share if that's the deal that they come to, but that's still undervalued. I think this stock is an easy $10, $15 a share. But then, eventually, as they become more financially healthy and rely more on their actual cash flow rather than issuing shares, they can start buying back shares, and then that snowball effect will happen where people start if they start FOMOing a little bit, but they also see that it's becoming financially healthy, more financially responsible, not issuing shares anymore. Eventually, in the distant future, they start issuing a dividend. It becomes more of that consumer staple company. Because if you think about it, Honest is kind of a consumer staples company. They sell baby products, beauty products, and they used to sell cleaning products, not anymore, but I think they will come back to it in the future. And they also align with that overall theme and trend going on with MAHA, Make America Healthy Again, paying attention to ingredients, really investing in research and development. That is what the Honest company represents. But if they do get bought out by a competitor, who would I be okay with, and at what price? Well, a quick buyout, I would be okay with $10 a share, even though in the future I do think it'll be a $20 a share company and a dividend payer. I would honestly be okay with either Elf or Estee Lauder buying out Honest. I would slightly lean more towards Elf because I think they potentially would leave Honest alone, let them keep investing in research and development, keep their clean products, even though, yeah, it might be a little bit more expensive here and there because you're using higher quality ingredients. I don't think Elf would immediately start cost cutting, cheaping out on ingredients, on the product quality. And we'll get to product quality here in a second, because like I said, I actually do use Honest products, and I'll explain a little bit more as to why I like the company so much. But yes, I do think, maybe $10, $15 a share get bought up by Elf, and then, have like some kind of common stock agreement where Elf Honest shareholders get Elf stock in return. Maybe I'd be okay with that, but still, like I said, I want to be a part of this company for the long term, and I want them to be independently healthy, financially healthy. And as for Estee Lauder, why would I be okay with them buying out Honest potentially? Well, I mean, that they're basically the number one player in the beauty space. That's the company that everybody knows and everybody's familiar with. And also, if they do some kind of deal where Honest shareholders get Estee Lauder stock, Estee Lauder stock is also beaten down right now, so potentially that could be a value appreciation play. But also Estee Lauder is a dividend payer, so that could, maybe work out in terms of yield on cost. So like the prices that I paid for Honest stock is so low that if I were to get Estee Lauder stock in return, my yield on cost would be so high that it potentially could be a pretty good percentage gain, right? Dividend yield. So yeah, maybe I'd be okay with that. But like I said, I actually do use a lot of Honest products. I know they're meant for babies, but like if any of you guys actually use dude wipes, next time you go to Walmart or Target or wherever you get your dude wipes, just buy 1 pack of Honest wipes and you guys will notice the difference. I mean, those dude wipes, I used to use them, but the quality is just not there. Like the wipes itself, they're just so small and weak. And I got big boy man cheeks and I need something that's going to be thick and wide. And that's what Honest is. And as for the serum, like I love using that after I shave and whatever. And yes, that is baby oil, but we're not going to get to that right now. Now, because I am very lazy and I just like to make my life a bit easier with technology, I'm going to show you guys a little bit of how I do my personal research just to save time. Even though using all these AIs like ChatGPT and Grok, they do get some things wrong here and there, but mostly I've had an okay experience with it. I still do like my own research on the side just to verify the information that they're giving me. But this is kind of like a baseline of how I do things. So anyways, so here I asked ChatGPT to give me the financial metrics that I mostly pay attention to for Honest Company. And it gives me, first it gives me the stock price, which is pretty useful. It gives me the chart, but it also gives me the key metrics. I am not entirely sure if this is accurate, but according to ChatGPT, it is about 5 cents a share, or maybe that's negative. I'm not sure, but no dividend, of course. And the 5-year revenue growth trend is about 10% a year. Tangible book value is positive, so their balance sheet is very healthy. Price to sales is very low. Return on capital, it is kind of low if this is correct, but of course over time they should be boosting that. 5-year share count trend is up, unfortunately, and the short interest is about 10% according to ChatGPT. Then of course it gives me like a summary table, which is really nice. All right, so now I asked ChatGPT to briefly summarize the recent Honest earnings and give me some important details from management. So of course revenue is about 93 million. Gross margins reached a record 40%. Crazy for an actual consumer products company, a company that sells physical products. Net income 4 million, turning profitable versus a 4 million loss last year, which is very nice. Adjusted EBITDA 7.6 million. Cash balance sheet strength 72 million in cash, 0 debt, strong liquidity. Consumption at the largest digital retailer rose 26%. I'm not sure which retailer they're talking about, but most likely Target. So that is good news. So as you guys can see, this company has no debt. They're financially healthy, positive earnings and cash flow, very strong brand. When people think about the Honest Company brand, they think high quality, even though it might not be as famous as like an Estee Lauder yet. It's still viewed as a premium brand, which is good. And just a quick update on some clothing retailers. Kohl's was down today, over 3%. American Eagle was basically break even today. Levi's was down earlier, but it looks like it's up on the overnight market. VFC slightly down today. Nike down over 1%. But just so you guys are aware, any of you guys that have seen my old videos, like I'm talking some of my earliest videos, will know that I do have a separate E-Trade account, and within that E-Trade account, I did go ahead and buy a few call options on Kohl's, American Eagle, and I think I bought one on Levi's. So I just wanted to give you guys a heads up. I did buy a call option on each of them. And I still think there's going to be a short squeeze. So I could be wrong. Like I said, this isn't financial advice. I'm not a financial advisor, but I'm just letting you guys know.